going to be probably a good morning, a good afternoon and a good evening, where we are covering various parts of the globe on this webinar. So welcome. We're going to just sit tight for just a few minutes. Thank you for being so punctual, but we're just going to wait just for a couple of minutes to let what is a very, very large number of people who have registered join the webinar. So I'll just have some moments of silence and we'll just give it another minute or two. Hello to those that are joining. We're just sitting tight just for a minute or two while a number of other people join us. There's a large registration, so we're just going to take just a minute or two to allow people to join. All right, everyone, we might get underway if people are just slightly late joining. The only thing they'll miss is my introduction, and they haven't probably missed a great deal at all in saying that. By way of introduction, my name is Richard Basil-Jones. I'm the CEO of the Australia-UK Chamber of Commerce, based here in London, in the wonderful Australia House on Strand. Welcome to our webinar titled Setting Up in the UK. I can tell you there is a very, very large number of registrations to this webinar, and I think that's a really fantastic and positive sign about the level of interest of companies and individuals looking to move to the UK to pursue business opportunities, and that's what this session is about. As you probably know, we'll be covering some topics in this part one, and then we have another webinar next week, same time, same day, on January 30, where we'll cover some other topics as well. Just some housekeeping. This webinar will go for around 90 minutes. That's the game plan, and we're pretty confident of sticking to that. It is being recorded, and we will be providing a link after this webinar to all those people that have registered so they can view it again, or go back to some of the areas that they'd like to review again as well. As I said, there's been a really fantastic interest in this webinar, and I think one of the really interesting things as well is the extraordinary number of industry sectors that are being represented. We have every industry sector you could possibly think have registered an interest in the Setting Up in the UK webinar, which is fantastic. And I think what you'll hear and what we hear regularly from our High Commissioner, the Honourable Stephen Smith, and also our Deputy High Commissioner, Elisabeth, is the line, there's never been a better time to be setting up and moving into the UK for business opportunities. And I think you'll get that sense when you hear from the Deputy High Commissioner, Elisabeth, and also David Camerlengo. So on that note, just one more piece of etiquette. For Q&A, there is a button at the top of your screen on your Teams application, which has Q&A. That's where if you have questions you want to ask, please submit them there. We'll try and view those during the course of the webinar and answer them at the end. We've already had about 25 questions already asked. We'll try and address some of those at the very end. We're not going to take questions or review the questions until the very end of the session. That's it from me. My role now is just to facilitate each of the speakers. And first, it's a great privilege to introduce our Deputy High Commissioner, Elisabeth. Elisabeth started in her role in January 2023. One of the things that I guess really should set the scene for her conversation is that Elisabeth was the chief and lead negotiator for the free trade agreement between Australia and UK, which entered into force, end of May 2023. Is that right? Now, I think I've got that right. May 31, 2023. So Elisabeth, over to you to talk to us a little bit about the relationship and the trade agreement and all things between Australia and UK.
Thank you very much, Richard, and absolutely delighted that you've initiated this webinar series. There's been such strong interest by business in moving to the UK and exploring opportunities here. And as you say, the opportunities really have expanded with the finalisation and entry into force of the UK-Australia Free Trade Agreement. We are approaching the 2-year anniversary of the entry into force of the FTA. So I think this webinar is really timely to discuss some of the opportunities. And I feel, as you mentioned, being chief negotiator, quite a deep investment in ensuring that business actually use the opportunities that have been created and really seek out and realise those opportunities, because a lot of work has been put in by Australia and the United Kingdom to really provide and expand and increase trade and economic and investment relationship. But to realise that really depends on business taking up those opportunities. At the Australian High Commission, we have a number of key pillars for our relationship. And these key pillars really are demonstrative of the expanded breadth and depth of the Australia-UK bilateral relationship. So apart from trade and economic and investment, which we'll discuss in a little bit more detail in a moment, some of our key focuses at the Australian High Commission include defence, with a key focus on the AUKUS partnership, Australia, United Kingdom and the US, which has 2 pillars: the delivery of the conventionally armed nuclear-powered submarines, that's pillar 1, but pillar 2, excitingly, really focusing on advanced capabilities. And there are certainly some opportunities for business as that pillar 2 is realised. In addition, we also have an expanded science and technology relationship, also a key focus on climate change and energy transition. And indeed, we have signed a climate change partnership agreement with the United Kingdom just last year. We have a lot to offer and a lot to share in that space, as does the UK, with quite a lot of experience, particularly in renewable energy and the green transition. But if I just focus in a little bit more detail on the FTA, just for a few moments, the FTA entered into force on the 31st of May 2023. And as a result of the FTA, the really headline-grabbing outcome, which brought benefits for both countries, is the elimination of tariffs on 99% of the goods trade between Australia and the United Kingdom. That meant that the tariff barriers that existed under the EU when the UK was still a member of the EU were all but eliminated, really freeing up opportunities, particularly for our agriculture sector, but also for key industrial products to enter the United Kingdom, and of course, vice versa. And in fact, we have seen two-way trade increase in just the last 2 years between the two countries. Now, generally, it takes a little time for trade to really pick up under a free trade agreement. And this agreement is no exception, but already we have seen a very strong take-up of those trade and goods opportunities. And some are really quite unexpected, including for us as negotiators. So when Spain and Morocco suffered flooding at the beginning of 2024 last year, destroying the tomato crops, Marks and Spencer turned to Australia to step in and fill the gap in providing cherry tomatoes for Marks and Spencer. I'll be very honest, that is not an outcome that I expected when we negotiated the agreement. Similarly, I'm sure you've all seen, we have Tim Tams and Waitrose now as a result of the FTA. Also honey and Harrods and a large number of other agricultural products, including an uptake in our beef and sheep meat exports to the United Kingdom. So that's one of the key, very tangible outcomes, but there are a number of other outcomes that are really important for expanding our trade and economic relationship. So for Australia, the United Kingdom is one of our most important investors. And in fact, Australia is the second largest destination for UK investment. We attract, or rather the UK is our second largest investor in Australia, and vice versa. So UK is our second largest destination for Australian investment. So that's a very strong relationship. It's about $1.5 trillion in two-way investment, second only to the United States. And investment occurs in all sectors, but what is really important for us is, as a result of the FTA, we have eased up some of the rules for the Foreign Investment Review Board to support investment into Australia. So now non-sensitive investment in Australia below $1.3 billion does not have to go through the Foreign Investment Review Board. Investment, we are also seeing a keen interest in Australian companies investing in Australia. And I think some of you online today are expressing that interest. So in particular, if we look at our superannuation sector, a number, as a result of the FTA, have announced commitments to much greater investment in the United Kingdom, billions of dollars worth of investment, particularly in infrastructure, but also in the clean energy transition. And so I think we can see a very demonstrable effect there from the FTA, providing that enabling environment for investment. But I would have to say one of the key outcomes, and one that is really a focus for today's webinar, are the increases that we negotiated with the UK in the ability for Australians to come and live and work in the United Kingdom, particularly in the skilled professional sectors, but also for youth working holiday makers. And we have seen really keen uptake of those opportunities. In fact, almost every week we are approached by a number of Australians who have moved here and are moving here as a result of the opportunities, those expanded opportunities that have been opened up under the FTA. So that includes, for example, intra-corporate transferees. The ability to come from Australia to the United Kingdom has been expanded from 1 year up to 3 or 4 years. But also spouses and dependents now have work rights, because we recognise, and during the negotiations we recognised, that moving to another country is a really big undertaking, and particularly if there are family involved, we need as much of a supportive environment as possible, and that includes the ability for spouses and dependents to work in each other's countries while accompanying the key visa holder. I've mentioned the working holiday maker visa in the United Kingdom. It's called the Youth Mobility Visa. That is probably one of the most notable and most used outcomes now of the FTA. And what that effectively means is that youth now, up to the age of 35, it was previously 30, can live and work in each other's country for up to 3 years. So that is an expanded time frame for working holiday makers in both countries, but also an expanded age limit. And particularly for the United Kingdom, there is no restriction in the sectors in which youth mobility holders can work. And similarly, there's no requirement for sponsorship. So basically, it gives Australian youth mobility visa holders an entry into the UK employment market. And the numbers are really demonstrating the uptake. So since the introduction of these changes in January 2024, we've seen UK nationals making up over 36,000 working holiday visa applications. That is between July and October 24 alone. So that is close to double the same period in 2023. And similarly, of the 23,000 people coming to the United Kingdom under youth mobility visas, just under half are from Australia. So 10,000 youth mobility visas, with another 5,000 from New Zealand, which enjoys a similar benefit. So we're really seeing there the demonstrable outcomes of the FTA, which pleases us very much, that those opportunities are being taken up. Finally, to support investment, of course, and movement between the two countries, we also have quite a robust framework for the mutual recognition of skills. This is for professional skills, and that's really important because that can be a hidden barrier to entry into an employment market. Now, generally, the recognition of professional skills is done between professional bodies. If I think of the Law Society in England or the equivalent in Australia, there's quite a robust framework for recognising legal qualifications. But the point of the framework is that should the professional bodies encounter difficulties in resolving the questions of mutual recognition, the two governments, Australia and the United Kingdom, can help really bring about outcomes working together with those professional bodies. And we have seen some of those opportunities expanded. We've got a very robust legal services dialogue now between Australia and the United Kingdom, architects, accountants, engineers, still a little bit of a work in progress in some respects, but also recognition of engineering skills. So all in all, they're a snapshot of some of the outcomes that we negotiated that really do support an expanded interest of Australians moving to the United Kingdom, particularly to live and work. And I would have to say that is the number one outcome that businesses in both countries brought to our attention while we were negotiating the FTA. So we were very pleased to be able to deliver that. Finally, I just wanted to shout out to Richard and his team, particularly the Australia United Kingdom Chamber of Commerce. During the course of the negotiations, which were entirely virtual as they took place during COVID, the Chamber were really helpful in bringing stakeholders in the United Kingdom together for video conferences and webinars direct with me and my colleagues in Canberra to talk about the key interests of businesses here in the United Kingdom. So, Richard, I'm really pleased that that relationship is continuing now with phase 2, as it would be, of implementation and take up of the FTA benefits. So thank you once again for organising this webinar. Thank you.
Thanks, Elisabeth. I think what we found when the free trade agreement was just about coming into play, that there was a lot of unknowns by the marketplace. And so look, all I can do to all the people that are sort of on this webinar who are watching it later is lean into it. There are really a lot of provisions there that are geared to help companies, small companies in particular, make and take advantage of opportunities in the UK. And that could be access to government tenders, all sorts of provisions in there. And so I really would encourage you to dive into the weeds and see, because there are some real opportunities. And there are the website via the Australian government that has resource, or contact your local trade and investment or Austrade, the state trade and investment body, or Austrade. They're unbelievably helpful and resource-driven organisation. Thank you again, Elisabeth. We'll probably move now on to our next speaker, and that's David Camerlengo. David is the Senior Trade and Investment Commissioner for UK and Ireland for Australia Trade and Investment. We all know it as Austrade. So David, over to you for a few words on the United Kingdom, its landscape and economy.
Yeah, amazing. Thank you, Richard. And I'd just like to echo Elisabeth's comments as well. Thank you to the Australia UK Chamber of Commerce for putting on this webinar. Richard, Nicole, Vera, this is really, I think, really bringing together some great and valuable content and information to support Australian businesses. And we see a lot of the types of inquiries that we get across our desk at Austrade, and you're going to cover some of that content today. So again, thank you and hats off to you. I realise this webinar is focused on setting up in the UK, but I thought I'd just speak really briefly a little bit about why the UK, and then a little bit about how to execute before we go on to some of the other speakers. So I'm not going to delve too much into the macroeconomic factors. I think a lot of the people on this call could probably look up, some of those details and the statistics around, the size of the UK market. I think one thing I will just mention is probably the familiarity of the UK market for Australian companies, and perhaps the similarity in terms of the regulatory environment is certainly a benefit. I spent 16 years living and working in the US before coming here to the UK, and I can attest to the fact that it's a much more similar in terms of alignment with Australia than certainly parts of the US. But what I did want to just quickly highlight is we have had, I think a bit over 6 months now of a new Labor government here in the UK. They have quite an ambitious agenda. They have some policies that I thought it might just be worth referencing, because some of those policies might be creating commercial or market opportunities for your businesses. So I thought it'd be worth referencing some of those. And there's also a little bit of overlap with the Australian government agenda that's worth referencing as well. So quick power through some of those highlights. Clean energy policy. So the UK government plans to be wants to be a clean energy superpower. And as part of that ambition, they have set a target of having 95% of Great Britain's electricity to be from clean sources by 2030. Currently, a little over half, about 56%. One of the mechanisms to do that has been the launch of Great British Energy, which is a publicly owned company that will invest in clean energy projects, capitalised with about £8.3 billion. And they're soon to release the Clean Power 2030 action plan. So could be relevant for a number of Australian businesses. On the infrastructure side, the Chancellor Reeves, announced plans to introduce a pension schemes bill next year that will pool assets from separate local government pension schemes into a number of 8 mega funds, and with the plan to unlock about £80 billion to boost investment in critical infrastructure as well. On the housing side, there's a commitment, similar to Australia, commitment to deliver 1.5 million homes over 5 years, working with local government, house builders and infrastructure developers. And there's also some ambitious planning reforms that are intended to accelerate planning. On the healthcare side, so a significant investment in the NHS, about a £26 billion investment over 2 years. One of the key objectives is to reduce the hospital wait times. And there's 3 overarching priorities to try to do that. One is moving the care from hospitals closer to communities. The second is my language, probably a bit greater focus on the digital transformation of the NHS. That really is around the greater adoption of technology. And then the third is moving from sickness to prevention, so greater investment in prevention. In terms of industrial policy, the UK is currently developing their industrial policy with a focus on key sectoral priorities. It's really around nurturing high-tech industries, supporting job creation and improving infrastructure, as well as reducing the regulatory barriers to innovation. And that's in areas such as clean energy, advanced manufacturing and digital technologies. On the science and innovation front, the UK government recently released their AI action plan, which includes an investment in the infrastructure around some AI growth zones, and also a goal to boost the adoption of AI across both the public and private sectors. And one of that, part of the underlying purpose of that is to try to boost and drive productivity growth, of which many countries are struggling with at the moment. So that's a little highlight of the some of the domestic policies in the UK that could be creating market opportunities or might in the future. The other thing I did want to just reference is a bit of a reminder that the UK is not limited to London. Certainly London is an economic powerhouse on its own in terms of financial services, professional services, and the tech sector, but there is much more to the UK than London. Scotland and Wales are themselves very strong economies, and with devolution delivering greater power to those countries. There's also a greater move towards devolution and devolved economies across the regions of England. And these are quite diverse. These regions have quite diverse economies. And they also have relatively newly established regional mayors that are driving the agenda across a number of local councils. So that includes the West Midlands Combined Authority, the Greater Manchester Combined Authority, and a new, relatively new, formed in May of last year, North East Combined Authority. And then you've also got areas such as Cambridge and Oxford, which many of you know for their incredible capabilities in life sciences and technology centered around their universities and academia. So I think it's important to remember that if you're considering your entry into the UK, don't just immediately assume London is the right place for your business. It may be, but certainly consider some of the other parts of the United Kingdom. So I'll just talk very briefly then about, okay, these might be some high level opportunities for your business. How do you then take advantage of these opportunities, right? So I think a key part is, understanding what the UK market is and is it a fit for your offering, starting to then test your value proposition with potential customers or partners, really trying to identify potential partners and define the pathway for your market entry. And alongside all of that is really getting good advice, which Richard and the team here, I think, helping you with this webinar by bringing some good advisors. From an Australian government perspective, there is support, as Richard suggested. So Austrade, Australian Trade and Investment Commission, we have a team here that focuses on investment attraction into Australia, but also a team that focuses on support for Australian exporters, as well as the states and territories. So all of the Australian mainland states have a presence here in London, here in the UK. That's New South Wales, Victoria, South Australia, Western Australia, and Queensland. 4 of them are actually based inside of the High Commission. And also there's some upcoming activities that you might want to consider. So there's always a number of activities that you might consider as part of your program, and you might seek to get some more information about. From an Austrade perspective, on the food and agribusiness side, we in March of this year will have another presence at the International Food Exhibition, and we'll have a business program centered around that, connecting Australian exporters to potential buyers, to retailers, to distributors and other partners. And our team also runs a number of other activities and campaigns with some of the major retailers. So feel free to get in touch. I talked about the NHS agenda. So on the health and medtech side, we recently delivered a virtual boot camp under our landing pad program umbrella December of last year. So helping earlier stage health and medtech and digital health companies understand the market, right? Understand what the NHS is, how it's structured, pathways to enter it, the regulatory requirements and the like. And that's going to be followed up with some in-market activities this year. We're looking at things such as the NHS Expo, which is happening in Manchester in May, I believe. On the landing pad side, we're considering or planning for a similar program for Australian clean tech companies, probably looking around Q2 of this year. On the tech side, we have a trade mission to Cyber UK conference, which is happening in May of this year. And the Deputy High Commissioner talked also a bit about the defence opportunities. So in September of this year, we, together with Team Defence Australia, this is the Team Defence Australia Pavilion, will have a presence at the largest defence expo in Europe, which is DSEI, which is happening here in London. So a number of activities where you might be able to get involved. And then in addition to that, the UK government has the Department of Business and Trade, which has support for businesses, and particularly investors that are looking for assistance to set up their business here. So if any of that sounds interesting, please feel free to reach out to myself or through the team at the Chamber, and we'd be happy to have a conversation with you. And with that, Richard, I'll hand back to you to progress this great webinar.
Thanks, David. You covered a lot of the industry sectors, which is really important. And the idea is to just make sure that people are aware of these activities going on. I'm going to quickly summarise a few key points. As Australia and the UK, like-minded individuals, highly competitive on the sporting arena, but there's a very similar cultural fit, and we do have some common shared values to make business a lot easier to do. So that's an important point. London is not the UK. UK is not London. That point is a very important one, and we'll touch on that in the second webinar as well, and we might touch on a little bit in this one. State and Austrade, great resources. For those organisations out there, if you haven't connected in, I really would encourage you to do so. And also just one of the other ones too, the Big Tech Week extravaganza that happens in June, early June, second week of June. In London, it's a significant event as well. I know there's a lot of tech companies on this call. On that note, thank you, David. You've set the framework, which is fantastic. We're now going to get down into some of that detail around some of the topics that we've laid out. So on that note, I'd like to introduce Martin Hamilton, a director from Menzies. We have about 160 companies as members of the chamber here in the United Kingdom, and Menzies are one of those great members. So Martin, over to you.
Pleasure, Richard. Can you all hear me fine?
We can.
Perfect. So I'm just sharing my screen now with my presentation. It's great hearing from Elisabeth and David about the various opportunities for Australians looking to invest into the UK through the free trade agreement. And I echo some of David's comments about the UK being a nation that's available for investment rather than just London. So I'm here today to talk to you about setting up in the UK and what that kind of looks like from a top level kind of approach. And so I'll start with a brief introduction about myself. So I'm Martin Hamilton. I'm a director at Menzies, and I specialise in international advisory. I regularly work with international businesses looking to set up in the UK, and I head up our Australia desk, meaning I work closely with a number of Australian businesses looking to expand into the UK market. Menzies are a leading UK and international business advisory and accounting firm. We provide a full service operation for overseas businesses looking to set up into the UK, resulting in increasing comfort levels for our clients when they're starting their expansion. Menzies are part of an international network called HLB. HLB covers circa 150 countries, and we work with our member firms across the globe to provide soft landings for any of our clients looking to operate overseas. In Australia, our member firm is HLB Man Judd, and who cover all the states in Australia, and we work very closely with them. In fact, I'm actually currently in Rome on a conference working with a member from Melbourne on a mutual client. So we have a very close connection with Australia, and obviously me in my position as head of the Australia desk, I work with Australians quite a lot of the time. Now, enough about me. Let's move on to what I've been asked to talk to you about. So I was kindly invited to today to discuss about company formation, business registrations, and setting up bank accounts, which is always a big discussion. We're going to start with company formation, and a typical question that comes up is branch versus UK company. We will then cover that off along with structural operations and the incorporation process itself. When it comes to VAT, business registrations, VAT's always a hot topic, so we go through a couple of areas of VAT, as well as HMRC and payroll, and ending with the bank account position. So just starting off with branch versus company. Firstly, what is a branch? A branch is effectively an extension of the Australian business. So it's not a UK separate legal entity. It's a department effectively of the Australian company that's operating in the UK. Results from that operation will only appear in Australian accounts. However, the profits from that operation will be taxed in both the UK and Australia. The double taxation treaty will likely provide tax credit for those profits, but that's something to discuss with your Australian advisors. We typically see branches used for one-off projects in the UK, rather than businesses looking to expand and operate in the long term. Typically, if you're entering the UK for a 10, 12, 18, 24-month project, you might not want to go through the rigmarole of setting up a company and all the compliance that goes with that. So a branch is a good fit for one-off projects. But long-term operations, typically, not all the time, typically we see companies being set up A branch structure will require a UK income and expenditure account to be prepared, and a corporation tax return to be completed annually, with our tax rate being 19 to 25%, depending on your profitability levels. The advantages of a branch. Well, branches can be used to test the waters. Not only do they provide good opportunities for one-off projects, so you don't have to go through the compliance elements of setting up a company. If you are looking to set up an operation here, but you want to dip your toe in the water, a branch can do that. And then you can see what kind of market you have in the UK for your product or service. And if there is a good market, then you can potentially convert into a company in due course if you see if that's the right and most appropriate thing to do. Also, branches have much less compliance than UK companies, as they avoid possible UK audits, statutory accounts, company secretarial work. Therefore, they are a lower cost alternative. Disadvantages, one of the main ones is risk. As a branch is not a separate legal entity, anything that goes wrong in the UK branch effectively exposes the Australian business to liability. Therefore, if you've got lots of assets and wealth in your Australian entity, that is exposed if anything goes wrong in the UK branch. So there's a commercial risk to consider. Company house requirements. So if you want to open a branch, then the Australian business needs to register the UK's company's house as an overseas business, and the Australian accounts will need to be filed on public record in the UK. Finally, insurance. Recently, UK insurers have stopped insuring branches when it comes to things like employers' liability insurance. They much prefer and have comfort in insuring actual entities. So if you're going to have a branch with employees in the UK, there's a legal requirement to have employers' liability insurance. And if you're unable to get that from a UK insurer, you will need to talk to your Australian insurer or find a separate global insurer that will be able to provide that cover, which sometimes can be challenging. Okay, so that's a branch. Let's move on to a company. What's a company? A company is a separate legal entity. That means all profits, tax, and risks are ring-fenced in the UK. A UK company can be owned individually by Australian shareholders, which certainly mitigates potential audit costs in the UK. However, we typically see clients wanting a UK company to start or join a group of companies. Profits can be repatriated from a UK company back to Australia, and our dividends do not have any withholding tax. However, you would need to speak to your Australian advisor about how those dividends are treated, whether that's being repatriated to a parent company if it's part of a group, or repatriated to an individual if there's an individual shareholder. A UK company will require to file statutory accounts on public record. It will need to prepare corporation tax returns, annual company secretarial documents. It might need to prepare an audit, and therefore there's quite a lot of compliance. What are the advantages of a company? The first one is a commercial presence. A company provides reassurance to potential customers. It provides, again, reassurances, or it's easier to employ staff if you've got a UK company. You'll find it easier to find suppliers as well who want to do work with the UK company more than with an overseas entity. So therefore, a UK company demonstrates commitments to the UK market, which then reassures the suppliers, staff, and potential customers. Another advantage is that a UK company clarifies the tax position. So therefore, there's no double taxation position to consider, and there's no apportionment of profits back between the two jurisdictions. Ultimately, it simplifies the tax position and clarifies it. Additionally, it simplifies the intercompany transactions. They become much easier to identify. So if the UK company is using the IP of the Australian entity or its staff, it's much easier to identify and calculate the use of that between two separate companies rather than a branch that's within the same company who owns the IP and staff. Finally, the UK company files its own ring-fenced accounts. So there's no need for Australian company to file its accounts in the UK. There are some disadvantages as well. As we'll come on to in a second, there is increased setup and structural planning required. As mentioned, there's increased compliance requirements, which typically lead to higher compliance costs. So sticking with company formation, but looking at structure. If you decide to go with the company, understanding how that company fits within the current group that you already got in place, or whether or not you need to start a group, requires some in-depth conversations at the beginning before any company is formed. You want your company to be formed correctly first time, in the right space with the right shareholders, whether that's individual or corporate, and therefore we typically have conversations with the Australian advisor and collaborate with them and yourself to ensure that when any company is set up, both jurisdictions' positions are being considered, whether that's tax or operations. So there is a collaborative approach before setting up a company. And again, a little bit of advice that's needed at the beginning before you can actually move forward with any incorporation. When you are ready to move forward with the incorporation, it's a fairly swift process to register a company. You can set a company up between 1 to 3 days. So it's a fairly smooth position. However, the time for the company to become operational needs to be factored into your business plan. Once a company is formed, within the 3 days mentioned above, it could take up to 2 to 3 months to become fully operational. The reason why is that the company will need to open a bank account, which typically takes a long time. It will need to register for various taxes, with VAT being especially challenging at times, as well as considering hiring employees and opening offices, setting up bookkeeping, importing goods. There's lots of things to consider to get a company to become operational. So therefore, giving yourself enough time is crucial to make any expansion into the UK as smooth as possible. Typically, we would advise people maybe 4, 5, 6 months just to make sure you can get your company opened, agree the structure, agree the operations, which we're about to discuss very briefly in a second, get registered for your taxes, get a bank account open, and therefore you're ready and waiting to start trading when you expect to, rather than trying to rush it all within a couple of months. Operations. Understanding UK operations. It is important to know how the UK company is planning on trading. Reason being is that the UK company is likely to be trading with the Australian parent or an Australian group or sister business. And therefore, there's considerations to understand, will the UK company have its own customers? Will it be supplying services to the Australian company? Will the UK company be using your Australian company's IP or staff to sell to third parties? It's really dictating how that UK company is going to operate. Is it going to be standalone, have its own customer base and employees, or effectively is it going to be a sales and marketing arm, finding customers for the Australian entity? So therefore, it just builds the Australian entity. So it's important to understand this. So it's likely that the UK subsidiary will need to trade with its Australian parent, as mentioned. Therefore, working out the commercial terms of any trade is important to identify. This is loosely called transfer pricing. Even though there are two businesses within the same group or the same ownership, transfer pricing regulations dictate that they have to trade with each other on an arm's length, a commercial basis, to ensure that each tax jurisdiction is collecting its fair share of tax revenue. I appreciate there might be further questions on this. It's a very detailed subject, so we can obviously answer any questions in the Q&A at the end, or we can contact me afterwards. But ensuring we're understanding how the operations of the UK company right at the beginning of the operation is key, because you need to build any intercompany costs into your margins. You can't trade with each other at cost. You can't trade with each other for free. There has to be commercial terms, and therefore understanding what those commercial terms are is a key element. Okay, moving away from company formations into business registrations, and as I said at the beginning, VAT is a hot topic sometimes, but it arguably potentially shouldn't be. Excuse me. It's very similar to your GST. You know, effectively we're charging VAT on UK supply of goods and services, which is ultimately borne by the consumers. So it's not much difference. You would recognise how it operates. So it's not something that you should be unfamiliar with. It's just effectively a slightly different change of name and probably slightly different regulations. We have 4 different rates, which is the standard rate, reduced rate, zero rate, and exemptions. Standard rate is the most common rate that you'll use, likely. In the UK, reduced rates typically for energy, power people. Zero rate is more bank charges, airfare, and exemptions are for insurance providers, etc. There is a compulsory VAT registration threshold of £90,000 before you have to register. However, if you're in the UK as a non-established taxable person, so ultimately if you've got a business in the UK but no footprint, there is a potential position that the threshold reduces from 90,000 to nil, and you need to register straight away. That's something we can certainly discuss that right at the beginning. Custom duties and tariffs. UK customs duties typically range from 0 to 25%. However, the good work done by Elisabeth to get the UK Australia free trade agreement in place eliminates customs duties on most goods imported from Australia to the UK. There's still some tariffs on goods such as steel and cheese, but they're going to be phased out over time. However, all imports from Australia remain subject to import VAT. However, this can be reclaimed, and it's not a cost to your business in the same ways that duties could be if charged. However, if you want to reclaim VAT for importing goods, then you need to be registered to 3 different sections for HMRC. You need to be an EORI number, which is an Economic Operators Registration Identification number. You need to be registered with the CDS, which is the Customs Declaration Service, as well as the postponed import VAT accounting. So there's a few registrations to do, but once it's in place, it runs fairly smoothly, and it's not something to be effectively afraid of. It's pretty much the same as your GST, and it's something it's fairly straightforward once you got your registrations in place. However, the time taken to register can be a bit of a pain. HMRC, especially if it's an overseas business doing registering for VAT, do like to ask lots of questions. We've got very good at anticipating those questions to reduce the length of time it takes to register for VAT, but they can, HMRC can, if you get a bad advisor at HMRC, they can take their time. I've seen registrations take 6 weeks. I've seen registrations take 6 months. So it's important to try and give them as much information as you can at the beginning. Payroll, just briefly touch on payroll. Setting up a PAYE scheme PAYE is our payroll tax, just to let you know. Ultimately, you can get that done in a week or two, even a couple of days at some stage. So setting up a payroll payroll scheme is not particularly challenging. But once you've got a scheme in place and you've got employees that you potentially want to hire, then contracts and handbooks are something that you want to focus on, and Rob's going to cover that off after me. The UK company will need to register for a pension. That is a legal requirement, and you will need to offer your employees the opportunities to join a pension scheme. There is a cost to the employer for that, which will be 3% of the employee's salary. So that's an additional cost in addition to the employee's salary for the employer, in addition to the employer's national insurance, which currently sits at 13.8%, increasing to 15% from the 6th of April 2025. So when you are hiring employees, you've got to take into consideration their salary, the 3% pension, the soon to be 15% employers NI, and build that into your budgets. You can also provide employees with benefits such as medical insurance, gym, buying holidays, life insurance, which maybe attract a better type of employee. Again, additional cost to you, and there's employers' national insurance, or Class 1A national insurance, they call it, on benefits as well. So it's an additional cost. So moving on to our final subject, which is setting up banks, and is it difficult? Yes and no. So I appreciate that's not particularly helpful, but I can explain. High street banks in the UK can be very hard to deal with if you're expanding into the UK and setting up a company which has overseas shareholders and doesn't have UK-based directors. If you add into the mix the typical Australian family trust ownership model, which I know quite well, but having deal with Australian businesses a lot, it does, I would say, rattle banks, and therefore it can take even longer for businesses to get set up. But there are ways around it. I regularly introduce my Australian clients and American clients as well to a bank called Airwallex, which is an Australian digital bank. They're not FCA regulated in the UK, which means they're typically providing banking user interface and using an underlying bank like HSBC to process the transactions. So the bank, your money is definitely safe with them, but they don't have to go through the rigmarole like HSBC with all the onboarding processes. So typically using a digital bank can make a bank opening position reduce from 2 months to 2 to 3 weeks. So when I say yes and no, the yes bit is it can be difficult if you're going with a high street bank. The no bit is that if you use a digital bank, it can be a lot simpler. And I see a lot of businesses using digital banks to start up their business. And then once they're established in the UK and they've got people, boots on the ground, they may tend to go to a high street bank. However, just one final point on this, which is if you are looking to migrate people from Australia into the UK, and a UK company will need a visa to sponsor the employee. So the UK company will need to sponsor the employee who will need a visa. That UK company will need an FCA regulated bank. So it will need a high street bank. A digital bank that's not FCA regulated will not do. And therefore, if that's the case and you're planning to do that, again, building in a time of 2 to 3 months to open a bank account will need to be thought about and built into your business plan. Anyway, that is enough from me. These are my contact details. Please feel free to reach out to me. Otherwise, ask the questions at the end on the Q&A and I'll happily answer them. And I shall now pass back to Richard.
Thanks very much, Martin. And look, just to reiterate, the contact details for all our speakers will be provided in a follow-up email. And the contact details, obviously, please feel free to reach out to the speakers on your questions. And with the questions coming in, we're obviously not going to get through all of them. And what we will do is, though, is ensure you get an answer. And so we'll allocate them to the appropriate person so they can follow up. On that note, thank you again, Martin. That was great. There's a lot there, a lot to cover. We can't answer all the details on every topic, but that was a fantastic high-level review. Let me now go to our next speaker, Robert Ney, who's co-head at LegalVison. Rob, you're away.
Excellent. Appreciate it, Richard. Thanks to the other speakers as well. I'll just share my slides now and we can get started. as I'm doing this, a little bit of background to myself and LegalVison. So LegalVison started as an Australian startup around about 11 years ago. And we've subsequently launched in the UK. We first sort of trial run an expansion to New Zealand. And then 2.5 years ago, we moved into the UK market. So you'll obviously hear from Nick later with a bit of a case study. But from our perspective as well, we've lived and breathed the journey that a lot of you are either embarking on now or considering embarking on. So hopefully in this presentation, I can provide some learnings based on our experience. I moved to the UK with LegalVison to set up the UK business. So I've gone through the process and I know what some of the trials and tribulations are, but I also understand how much of a rewarding process it can be despite the challenges in doing so. So there's a lot to cover from a legal perspective. And when you are launching in the UK, the markets are quite similar. David touched upon that from a regulatory compliance standpoint, but there are definitely some key differences in the market from a legal and regulatory perspective. So what I'll do is I'll touch upon different areas of law that you'll need to be considering, from employment to intellectual property, thinking about the key contracts that you have in place with clients and suppliers, and then also very relevantly, data and privacy and the GDPR. Perfect. So if we start off with business owners, so we've just heard sort of from an accounting perspective, things to think about when you're setting up a UK company or a UK branch. One of the key benefits, obviously, in setting up a UK company is the separate legal entity means that your liability is confined to the UK entity. So that's something you'll have to consider. And what I would say is what we find is group company structures are probably more common in Australia than they are in the UK. But we assist a lot of companies moving from Australia into the UK market where they already have an existing group company structure. And then it's usually a case of creating a UK subsidiary or an operating company to carry out the UK venture that fits within that group structure. So what's important there is if you are setting up a company in the UK, you need to have some of the key important documents in place from a legal perspective to cover you. So a shareholders agreement covering the relationship between the shareholders, articles of association, which is essentially like your company constitution, the UK equivalent. And then there's some other things in terms of if you are a director and you're actually providing services to the UK company, you probably want to have a director's services agreement. Or if, for example, you were on the board but you weren't an executive director, you might have sort of a letter of appointment covering your dealings with the company. Another thing, and I'll touch upon this from an intellectual property perspective, but when you've got a group company as well, one thing that you might want to consider is having an IP assignment and license agreement, which means that if, for example, the UK subsidiary creates intellectual property, you would assign or transfer that into your holding company, which would most likely be the Australian holding company. And I'll touch upon the last point there, the employment contracts and contractor agreements on the next slide. I think what's really important from a legal perspective, and I guess also commercially when you're looking to launch in the UK, is what's really important, and one thing that we found very valuable was all of the planning and preparation going into a launch. So from an employment perspective, having a really strong launch team who you trust, who you believe can really transfer your values and your culture as a company into a new market. So we started off with a team of 6 who had worked in the Australian business, and now we're a team of around about 50 2.5 years later. Some of the key things to think about from a UK perspective are to register with HMRC before you start employing staff, and then considering what document is actually going to cover the employees when they're working for the UK business. So where that's a little bit different in the UK is in Australia, you generally just have employees or contractors. In the UK, there's sort of a concept or a tier of workers which fits in somewhere in between the middle of those two, which is workers. So they have some of the rights of employees, but not all of the rights of employees. So we can provide a lot of value by doing that assessment as to whether someone should be a contractor, a worker, or an employee, and then making sure that you've got the relevant agreement in place to cover that relationship. And then also having what we call a staff handbook. So it's essentially all of the workplace policies that cover your employees and your contractors. And that also can extend to health and safety, which is really important because the regulator over here has the ability to sort of inspect what people are doing, what businesses are doing from a health and safety perspective, and to impose fines as well. So that's something that ties into employment and is really important to consider as well. I touched upon directors and founders, sort of what agreements you have in place there between yourselves and the company. And I guess as with any sort of employment contract, I mean, there'll be standard confidentiality and IP provisions, restrictive covenants, that kind of things as well. But one of the last points that's been touched upon, and I know that Richard is keen to do another webinar from a visas perspective, but having a think about where your staff are from. Do you have English employees in Australia who are looking to relocate back home? Or are you bringing over Australian workers? Are they coming on a youth mobility visa? Are you going to have to become a sponsor? Those are the types of things that you should be thinking about ahead of launch to make sure you're in the best place once you actually launch in the UK. We do have a fact sheet as well about employment rights, and we've also got a guide about launching in the UK from Australia. So my email's on the slides here, it'll be circulated as well. So definitely encourage everyone to reach out to me. Perfect. The next topic is intellectual property. So really, really important for a range of different businesses. But what I'm talking about in terms of intellectual property is creations of the mind. So that could be registrable forms of IP. So for example, trademarks, covering your branding, things like your business name, your logo, patents, designs, copyright, but it can also be sort of informal forms of intellectual property like trade secrets, confidential information, goodwill. What is really important when you're launching into the new market is how best to protect the valuable IP that you've generated in your Australian business in a new market. One of the things that we try to get companies to be thinking about from an early point when considering launching into the UK is trademarks. So obviously, if you're launching in a new market, you want to do some research as to whether there's any businesses in a similar sector using your name or a similar name, and whether you'd be able to use your Australian business name in the new market. Trademark applications as well, they take about 4 months. But in terms of the fees for 10 years worth of exclusive rights over your trademark, they're really nominal. So really important to get that process underway ASAP. But there's some other ways that you can also protect your IP, and I touched upon it earlier, but having an IP assignment and license deed if you've got a group structure, so that all of the valuable IP is held by the holding company and that it is at arm's length from any potential people looking to bring a claim against one of your subsidiaries, whether in Australia or in the UK. Something just to very clear is intellectual property is obviously really, really crucial to your business. So it's really important to spend the time to actually thinking about how to properly protect it and make sure that you've got the legal documentation in place to do so. Commercial contracts, and this is sort of my bread and butter, and I spend a lot of time with Australian clients launching into the UK, having a think about how their commercial contracts are going to be adjusted for the UK market. Now, if, for example, you operate on a B2B basis only, so just servicing businesses, there's probably a few less changes, and it might be the case that you could actually use your key client agreement. So that could be like a SaaS agreement. It could be your T's and C's for your app or platform. It could be in-store terms. And it might be the case that we just need to make some changes here and there, but broadly speaking, the agreement can be largely aligned with what you have in Australia, which is obviously good from an operational perspective. However, if you are also servicing consumers, the UK and the Australian consumer laws have similarities, but they also have a number of key differences, including a 14-day cooling off period if you're sort of selling online or sort of not in store for consumers. So it's really important to have a chat with the lawyer, have a chat with our team and see whether we can actually use your existing documentation and make it amendments to them, or whether you actually need brand new contracts for the UK operation. And then also some things to think about when you're actually dealing with suppliers. We sort of touched upon it earlier in the webinar, but when you're considering whether you're going to set up a UK company, it's worthwhile asking your suppliers whether they'll actually contract with an Australian entity. In my experience, a lot of suppliers and other companies in the UK definitely prefer to deal with a UK company. And it might be the case if, for example, you're in construction, that if, for example, your UK company has just been set up, they might be requiring parent company guarantees to give them a little bit more comfort when contracting with you. Obviously, really, really important before giving something like a parent company guarantee or director's guarantee to have that checked by a lawyer. As far as possible, you want to try to avoid doing that altogether. And the last point there is with respect to data processing agreements. And I'll touch upon this on the next slide, because data and privacy is probably one of the areas where there are the most differences between the jurisdictions. So you may have heard of the GDPR, but essentially the GDPR was Europe's set of privacy and data regulations. Now, following Brexit, the GDPR still applies in the UK, but it's sort of referred to as the UK GDPR, which means that largely it aligns with Europe and the GDPR in Europe, but there are some differences between the UK and member states in Europe. So that's quite important. I mean, generally speaking, if you're complying with the UK GDPR, you probably got a good level of cover from a data and privacy perspective, because it is sort of seen as the gold standard in terms of privacy legislation worldwide. But I guess from an Australian perspective, one of the biggest things to think about is the Australian privacy laws have a sort of a lower level of protection from a data and privacy perspective compared to the GDPR. And for that reason, the GDPR actually doesn't recognize Australia as having a similar level of protection of people's privacy rights. So that can be really important from your perspective when you're launching in a UK market. and potentially in situations where your Australian business or people from your Australian business are actually assisting the UK operation and handling personal data of your customers from the UK. And there's some key privacy documents that you may need to have in place, for example, a data sharing agreement or a data transfer agreement between your entities, because ultimately you need to sort of be ensuring that if your Australian entity is using the data or the personal data or personal information of your UK client base, that they're treating that data in a similar way as if they would have had to comply with the GDPR. So it gets quite complicated, and it can be a bit of a task to try to work out exactly what you need to have in place from a privacy perspective. But that's where having a chat with our team can provide a lot of value. Some other things to think about from a privacy perspective are the ICO, which is the regulatory body in the UK governing data and privacy. So generally speaking, as a business, and there are some exceptions, but you'll have to register with the ICO and pay a fee there. You'll also have to think about your privacy policy, whether you can sort of have one privacy policy that applies to all of your group companies, or you just have a UK specific one. And then data processing agreements. So this is quite a novel term for an Australian business. It's not something that we have in Australia, but data processing agreements are essentially agreements between a controller and a data processor. Now, I'm not going to dive into that in too much detail because it is really complicated, but essentially under the GDPR, a data controller is the entity that sort of makes a decision as to what personal data is being collected and what it's being used for. And then a processor is a company that is using or processing that personal data based on the instructions of a data controller. So if, for example, you were offering a SaaS platform and you were collecting data from your clients in order to set up an account on your platform, but then your account or your platform was hosted by AWS or Google, Google or AWS would likely be your data processor. So in your agreement that you have in place with sort of any of the third parties you're relying in order to provide your services or your goods, you would likely need to have a data processing agreement in place. And again, that's something that we can advise on and we can prepare to ensure at the end of the day you're complying with the GDPR and sort of to avoid or minimize the risk of being fined by the ICO for non-compliance. And one of the last points with respect to data and privacy is obviously AI has exploded recently and it's become a buzzword and a really important consideration for businesses. One thing to keep an eye out for is the EU has recently enacted an AI Act, sort of the first of its kind. Currently, we don't have anything in the UK that's similar, but I do suspect with the new government and their plans to sort of roll out AI in the public sector, that's something to watch. And before too long, I'm sure we'll have some AI regulations in the UK that you'll also need to think about complying with as well. Hopefully that has been a good enough high-level summary, but I think just to step back a little bit, but there are a lot of legal considerations when you are entering into the UK. It's something that we've done ourselves at LegalVison. So after the webinar today, you'll get access to a complimentary legal health check with a member of our team to sort of dive deeper into your specific business's plans in launching into the UK market. And we can provide a lot of value and input as to some additional things that you might need to consider that are specific for your business. So feel free to claim that opportunity either by emailing the email address there, robert@legalvision.com.co.uk, or just reaching out once you've got the materials from the webinar. Excellent. Back to you, Richard, and over to Nick after this.
Thanks, Rob. For those, a large majority of people have stayed with us, which is fantastic. There is a lot to consume. We are into the final lap. We're going to a gentleman who looks after a business called Bureau Booth. I met Nick a little while ago. Again, another great member of the chamber, who, interestingly enough, were helping in the refurbishment of Austrade's offices and the High Commission's office with regard to some bureau booths. But I'll introduce to Nick now. I'm going to ask, sorry, just Rob, if you could just turn your share screen off so we can allow Nick's face to come up. Thank you, sir. So Nick, over to you to give you a self-introduction and your experience in coming to the UK market.
Yeah, brilliant. Thank you very much, Richard. Pleasure. And my pleasure to present our story of setting up in the UK. So I'm Nick Balashov, my name, and I'm the General Manager for Bureau Booths in the UK. Hopefully, I'll give a bit of a backstory that might be helpful and relevant to some of you guys who might be following a similar path of basically expanding the business from Australia into the UK and other global markets. Very quickly, a very brief summary of who we are and the backstory. So we, as a company, we supply a modular and flexible solution for office fit out. And essentially, we're intending to be a genuine alternative to traditional construction. So more specifically, we manufacture and supply soundproof modular office pods. So that includes everything from small sort of phone booths, effectively what I'm sitting in right now for Zoom meetings, virtual calls, things like that, all the way up to much larger, full-size modular meeting rooms that are entirely sort of modular constructed and don't require any permanent build. So the intention is they are more sustainable, more cost-effective, and more flexible than the typical fixed construction that has been the norm for the office fit-out market for generations. I suspect many of you on this call might have seen these type of products in many offices. They might be our products, they might be some of our competitors. But the really, really big opportunity that we are addressing is that the modern demands of workplaces have completely changed. Clearly, companies need to be much more adaptable. Workplaces need to be increasingly adaptable to those needs as well. And that's probably a challenge that maybe even some of you guys will start to relate to. If you are looking at setting up roots in the UK, no doubt at some point you will likely need to think about setting up an office. And with that, you will be faced with the choice of incurring either a huge expense of signing a long-term lease, and then also fitting out that facility with furniture, meeting rooms, construction, or you can, and then you need to also plan for what you actually require before incurring that expense. How many staff you're going to have, how big that facility needs to be. Or the alternative is you work with a system like ours, which enables you actually to supply that in a quicker, more flexible, cheaper way that actually moves with your business requirements. So I guess a bit about our history and how we ended up in the UK. We started life founded in Australia about 6 months before the pandemic, which was raised some hair and stress for all the founders as the world changed and everyone worked from home, doing an office fit out company. But obviously since then, the mega trends of how we work today, being a lot more virtual, a lot more remote, a lot more flexible working, has actually turbocharged our business. So naturally, we've become a leader in Australia, but naturally Australia is a small market, and so we have big grand ambitions to be a global company. And so the UK naturally became the extension of one of the markets we expanded to next. And so I took on the role of basically the general manager and building our business in this market. We opened here about 18 months ago. And this presentation so far has actually been incredibly insightful and interesting to me, even for me, because I laugh at all of the mistakes that we made in setting up the business and all the landmines that we hit that I wish I myself heard this presentation two years ago. Frankly, we didn't do a huge amount of planning in setting up the UK business. we took probably a traditional startup approach of we need to test the market. We're going to do it in a light touch way. We're focused on the business itself. We're focused on operations. We're focused on marketing the product and generating sales. And being a startup with low resource, we needed to move very, very quickly. And so all the focus was on the business and operational side, and less so on all of the topics discussed here. But and I put my hand up. I was probably a bit naive and overconfident because I'd spent 10 years prior in finance and touching on legal topics. So I probably thought, most of these things we can figure out and iron out as they come up. And it worked out, but with a lot of stress and grey hairs along the way that I would have loved to avoid had I been to a session like this. There's probably as I say, there's probably half a dozen points that I've got here in my notes that I'll quickly run through and then sort of relate back to some of the points that some of the speakers have mentioned. So the first point around the company formation, company structure, we set up as a company as opposed to a branch and some of the other structures that the speakers identified. For us, it was a pretty clear choice because we did want to have a long-term sizable presence rather than being sort of under the shadow of the Australian business. So it was very clear that the company was the right structure for us. I think another interesting topic is the choice of company directors and how companies actually structure that. Again, for us, it was a relatively straightforward choice because I was already living in the UK and naturally I became a company director, effectively building the business here. But I definitely would underline that as a something to consider for companies that have different structures, because it can raise all sorts of interesting considerations and challenges of who actually takes that role, and then also complexities of getting bank accounts and things like that later down the line. One of the big landmines that we hit is on I guess company registration, but more specifically VAT and trade documents. I think Martin earlier raised that actually setting up a company in the UK is super simple. It takes 10 minutes and you get a company within a couple of days. But the challenge and the issue we had later down the line is actually on the VAT. It took 3 months for us to then get a VAT number, and it meant that we couldn't properly trade where we actually had a huge amount of demand and interest from customers buying our products, and it was a very awkward conversation saying that we're not fully registered and we don't have our VAT numbers yet. So that's something I definitely highlight, just the time it takes, and even though the websites say it can be done in 30 days or 20 days, the reality is much, much longer and needs a lot more planning and thought. Bank accounts, again, interesting. We took the same approach as Martin laid out. We ended up signing up with a neobank, Monzo and Airwallex, actually one of the ones that Martin mentioned, for the same reason. Typically, setting up a bank account can take months. With the high street banks, the typical neobank can do it in a week. So we did get up and running quite quickly. However, we quickly found that bank actually wasn't really fit for purpose. It's good enough to set up for the first month or two and have a bank account, but the reality is dealing with the type of clients that we deal with, serious multinational corporations, it's no longer fit for purpose for that. And so you do need to, in my experience, need to think about that banking. Even though you get a band-aid solution initially, that banking process, something I wish we would have thought about earlier and started the process earlier. And now we have a kind of complicated mix of bank accounts because of how we set up. What I mentioned here, payroll and pensions, Martin also mentioned, that was probably a complicated topic, but actually it's made relatively easy because there's a lot of software, even things like Xero, our accounting software, does step you through a lot of the registration processes. So although it would be full of landmines if there weren't lots of services off the shelf that help you do that. But I'd say that was probably an area which was more straightforward, I guess. I'll definitely highlight the support network around the Chamber of Commerce and Austrade. Obviously, we spoke earlier, the South Australian Trade Organisation. We actually didn't really connect with those organisations until we were very much established already. Whereas a lot of the benefit I think we would have got out of those relationships would have been much earlier in the process. So I definitely encourage everyone. Well, it's good news you already know about these support networks, so definitely use them. We didn't, and it would have made life a lot easier had we done so. Final quick one, a bit of a shout out and tangent to one of the next sessions I think is running next week about London versus other markets. definitely an area that we can relate to. We set up in London because it was natural for us, because being a global organization, London does give credibility, and I was already living in London, so it did make sense. However, what we found, ironically, is that once we started doing paid marketing and networking and looking for opportunities and customers, in the first 6 months, ironically, a lot more of our opportunities and business was actually done outside of London. I think it's because those markets are actually much, much less competitive, even though they have enormous in GDP and enormous opportunities, and I think they're underserved. So it was an interesting lesson of not only where to set up the company, but actually where you might target customers. And probably final one on the legal side, definitely a lot of the topics that Rob mentioned in his presentation, also very, very topical. Probably for us was slightly easier given the nature of our product. But again, they're even things that we're trying to still unpick and sort of complete almost 2 years into our registration here. So definitely, I'd underline that the earlier they think about it, the better. And I sat in your position 2 years ago, being quite naive about the complexities and the requirements, and I definitely underline the need to think about those things earlier. I'll probably pause there. I'm conscious of time. Richard, do we need to finish off for Q&A?
Thanks very much, Nick. That was fantastic. And look, and I think realistically, what people who are tuning into this webinar want to hear is not this extraordinary success story that you got it all right, and it's an easy process. It was a warts and all review of your process. We know the success you're delivering in the UK, and congratulations on that. But there are hurdles, there are obstacles, and I think your openness about some of the headaches you had and some of the roadblocks you hit are real, and it was great to hear from those. And so thank you very much for your real case study. Can I say we've got a large number of people on the webinar still. I didn't want to cut this short, but we looked at the questions. We had about 25 questions in advance of this webinar, and to be honest, some of them are very detailed and very specific that we'll probably manage through a follow-up, and we'll disperse those to the specialists. A number of the other questions, I'm very happy to say, have been answered through this session. So, without trying to cut the Q&A short for the sake of it, what we will do is make sure that every question that's come in, we will get back to you if it hasn't been sort of addressed, but we will get back to you. I just might throw one question out if I can, and I dare say this one, I think it's for you, Martin. How does your summary change at a high level if an Australia head company bought an existing UK business?
Yeah, thanks for that, Richard. That came from Laurie Cole, I think. Not a great deal. So ultimately, if you're acquiring a UK business, there's the M&A element that needs to be undertaken in order to be able to acquire it, agreeing terms and everything like that. But once you've got through that process and you've got the UK company in your Australian group, it's understanding how that UK company is going to be interacting within that group. Now, if you've got a standalone UK company that is ring fenced and it's got its own customers, it's got its own employees, it's got its own IP, and therefore it remains ring fenced, then there might not be a huge amount to do. But if you're planning on using some of the UK IP in your Australian group or some of the Australian IP in the new UK company, understanding how those interactions work from a taxation perspective, it is a key element, and it's something you'd certainly need to look at. There will be agreements that need to be drawn up, legal, which Rob can maybe comment on in a second. But ultimately, you're going to get the same challenges as I mentioned in terms of how you're operating, what's the transfer pricing position looking like, and what else did I put down? Repatriation of funds, if you're actually going to take some of that capital or profit out of the UK company back to the Australian parent, what does that look like from a taxation perspective? And therefore working with your UK and Australian advisors in collaboration will be key for that.
Yeah, absolutely. I'll jump in just quickly on that one, Richard. I guess from a legal standpoint, if you're thinking about buying an existing company, I mean, a lot of the legal risk is that you're taking on sort of the risks and liabilities in that business as well. So as part of the M&A process, the business purchase process, you should be doing a lot of due diligence, both from a legal perspective, but also from a commercial perspective, to know exactly what the business is that you're looking to purchase, what contracts are in place, are there any sort of existing claims or disputes that that company is facing, and just making sure that before you do purchase it, you know exactly what you're getting yourself into. So I guess that from a legal perspective is the risk, but you know it might be outweighed by the benefits in terms of an existing company probably has a lot of goodwill, a customer base, network of suppliers, etc.
Thanks, Rob. Thanks, Martin. Look, I'm just going to wrap up now. 10:29. We'll get full marks for finishing on time. For those people, we have obviously webinar number 2 coming up next week. Just to reiterate, you have to register for that one. Your registration this webinar doesn't carry over. You have to register again. The focus on the next webinar will be around tax and VAT. Fairly important topic. We're going to get into the weeds in that particular area, and also around location. And we're going to hear a little bit around some of the incentives and inducements to work outside of London. And I think that will be of great interest to a lot of people. Various regions of the UK do set themselves up as specialising or focus areas for certain types of tech or hubs of particular services. And it's very much of interest to a lot of people. I'd like to thank everyone for joining us. That's the first part, but most importantly, our speakers. As I said, I'm not planning on setting up a business in the UK anytime soon, but I have to say what an incredible summary as a starting point where companies are thinking about it. A lot of these people on the call could be at 5% in terms of thought process, or they may be at the 99% stage, or even 100. But it covered a lot of ground. And I want to thank you for your input and coverage. To everyone else, thank you from the Australia UK Chamber of Commerce, and we're looking forward to you joining us in the next webinar next week. So thank you again. Good night or good morning, wherever you are.
Thanks, thanks, Richard and team. Bye, everybody.
Yeah,
Thanks, everyone.
Richard. Really appreciate that, Richard and Nicole.